It's Monday morning, September the 25th, and this is the Red Shoe Business Club. Today we're going to talk about record keeping, and I'm going to start initiating a little bit more control on myself because I can talk a lot. I'm going to work very hard to keep these meetings to 10 minutes or less, although a few may go over depending upon the complexity of the subject. Second thing I'm going to do is I'm going to start detailing the points as we go through them. So let's get started. I'm Mike Wright, by the way, with Tax Right. We're the sponsors of the Red Shoe Business Club, and we're here to help small businesses like yours do better, grow bigger, and make more money. Why is record keeping important? Well, let's remember back to one of the sessions that we had last week when I talked to you about setting up your business bank account. It's part of your asset protection regime. It's important for you to have that business bank account in order to be sure that all of the transactions from your business pass through an account that is identified as limited to what you do for business. So, I may have to change over time and get another board way to mark these things down because it flips around too much. Many people, even though they're faithful to start their business with that business bank account, think that that's the only record they need to keep. Because in their mind, everything, if they're being faithful to keep every business transaction in that account, then wouldn't that represent a complete financial record for the business? It shows all the money coming in, it shows all the money going out, and it identifies who and where that money is from. And so many people go along with that. In my experience as a tax preparer, I know that many times when people come to me and say they haven't filed tax returns for several years, which is fairly common, and we'll talk about that on another session, they'll have no other records other than their previous bank statements. And they think that's sufficient. But there's a reason that that's not, and here it is. Not every dollar that comes into the business is income. Not every dollar that goes out of the business is expense. We'll talk about the differences of the different kinds of transactions on another session, but for today, I want to just point out to you that there is a difference. Income can come from revenue, in other words, sales. Money can come in from income or revenue, which is sales. Money can come in from loans that you've taken out in order to expand your business. Money can come into the business based upon investments that the owners make to make the business work better. Money can even come into the business for such things as refunds or rebates or things like that. Only one of those kinds of deposits is income, and that's in money that comes from revenue for the items you sell. If you're trying to go back and keep records for either tax purposes or just your own knowledge of how your business is doing, you want to be able to identify what is income. Tomorrow, we're going to talk about financial statements, and I'll speak a little bit more about where those kinds of deposits show up, but they don't show up on the profit and loss statement, which is what most small business owners think about whenever they're thinking about how well their business does. They look at the income statement, and that's why you can't use just your bank statement as the only record for your business. Because look, you have to remember that that check from Jones Banking Company for $1,000 was either a client paying you for services that you rendered, or was it a loan that you got from that banking company? It's a different situation. Same thing is true with the money that you pay out. And again, we'll expand on this tomorrow a little bit in the financial statement area, but The best way I can, and the easiest way I can describe that is if on your bank statement you have a payment on a loan that you have made, say, again, the Jones Banking Company, $500 monthly loan payment. That is not an expense because the payment that you make has two components. One of them is the repayment of the loan itself, in other words, a decrease in the principal. And the other is the interest that you paid the bank. The interest alone is an expense. Well, you're saying, why isn't paying back the loan itself an expense? The reason is that when you kept your book, when you took out that loan, you got the $10,000, say, in order to buy a new widget assembler. And that widget assembler cost you $10,000. The widget assembler is the expense, not the loan. The loan is a liability. So to say that you paid back the banking company $500 for your widget assembler loan is not an expression of expenses. It's more complicated than that. You have to be able to keep track of the expense of the widget assembler itself. And there may be some other calculations based on that, depending upon whether that's a depreciable asset or whether that's an expensable asset. But then you also have to keep track of the payment that you made for the loan, where you're putting down the difference between principal and interest. I should write these things down, shouldn't I? Okay. Good. So if we're talking about an asset, that's an expense. Yeah, this writing is going to get me. And as I've just pointed out, you also have a principal and you have interest. These things are not revealed in your business bank account. These are all reasons, briefly covered. These are all reasons for keeping other kinds of records that allow you to divide up the way you handle the money that passes through your business account. Now, there are a variety of ways to do this. One way that many people do is to use spreadsheets. I should hire me a secretary to do the writing so that you can see what I'm saying better. But a spreadsheet, you're familiar with them. It's Excel, it's Google Sheets. There are a variety of other spreadsheet programs out there, and many people like them. They're powerful softwares. They allow you to take details about every transaction. And the way I generally suggest that you do that if you're going to use a spreadsheet is each line describes the full transaction, the date, who the payee or the payer were, the total amount. And then you have a column for income, but that total amount might not equal the income. Or as an expense, the total amount for the expense needs to be divided up into the various categories. Is it an expense for repayment of a loan? Is it an expense for office supplies? Is it an expense for payroll? All of these things require their own column. And so each individual line will have those three starting out items, date, name, and total amount. But then the lines that go off to the right will have the detail about how that should be accommodated. Then when you're through with your period, whether it's a month or a quarter or a year, you can total up the various columns, and now you can have a set of books that you can use for taxes. When I'm working with someone that has used a bank account as their only record-keeping source, that's how I do it. I set up a spreadsheet and I start putting each transaction down in that way so that then I can turn around and put that information in the appropriate place in the tax return, wherever it needs to be. Likewise, if you're going to be preparing your own financial statements from those kinds of spreadsheets, those totals then allow you to put that income or that money where it needs to go, whether it's on the profit and loss or whether it's on the balance sheet. And it might even be important to know for the third financial statement, the statement of cash flows. But only by using the spreadsheet at a minimum can you easily and readily put together the categories that you need in order to really understand how the finances of your business are moving along. And then finally, another choice is software. Now, if I'm working with a client and they're going to be a client of mine that I provide the business services for, we're going to use some form of QuickBooks Online, because it provides us a very powerful tool that can, once the program is set up and functioning to the satisfaction of both me and the client, then we can see how things are going instantly, because both me and the client have access to the programs. We can ask for the reports and we can break things down, because as we're putting them in, which, as I said, can be almost automatic, as we're putting them in, they're already being categorized and ready to be analyzed. QuickBooks is the program that I choose simply because it's the one that I use and it's the one that I'm familiar with. There are a variety of other perfectly reasonable software choices. There are desktop choices, there are online choices, there are all kinds of things that you can use. I choose QuickBooks, and because of that, I bring all my clients to QuickBooks. And that's simply because I don't have the time or the inclination to learn another set of special rules for accomplishing what I know that QuickBooks can accomplish very quickly and very easily. But by moving through these categories, by understanding how the money that goes through your business account how that is done, how that makes a difference in how your business is doing, not only for how you feel about how it's doing, but how it's doing for your planning purposes, as we'll talk more in the future. It's very important to be able to gather this detail, and it's also much easier to be able to gather the detail as we're going along, rather than trying to do it at the end of any given period. So that's all I want to talk to you about today in the nature of record keeping. We'll come back to this over and over again, because record keeping is one of the most important aspects of maintaining your business as a business. And we'll talk more about that later this week as well. Tomorrow, we're going to talk specifically about financial statements. And because that's the tool that bankers, the tax people, investors, that's the tool that they rely upon to have an understanding of what your business is doing. And as I said, we'll talk more about that tomorrow. The Red Shoe Business Club is here for you. I hope to get some comments from this broadcast today. And if not from the broadcast, comments when I have it posted on Facebook and later on when it's available on YouTube. But please take a look at these. They're here for your service. Let me know what you think about them, and also let me know how I can make them better. But the place to go is the Red Shoe Business Club Facebook page for right now, and there'll be more coming out as time goes on. I will mention very quickly that next Tuesday, which is the 3rd of October, I'll be doing a special workshop on evaluating your finances for the fourth quarter. So either watch your email for information about that if you're on my email list. And if you want to be on my email list, send me your email at mike@taxright.net. That's mike@taxright, TAXWRIGHT.net. Do that, and I'll get you on the list, and you'll keep up with all the things that are going on at the Red Shoe Business Club. For today, that's all. Thanks so much.